Hey everyone, Joe Shu here. I'm with the team, Sammy and Tristan at CCI. Welcome to 2023. Here is going to be a massive year, and we're really excited to bring our new developments to our premium newsletter subscription. If you haven't already been a subscriber, we used to do monthly releases, and then we started to transition to do the bi-weekly fundamental analysis pieces with Tristan, the main man himself. And then this year we've made a decision based on some feedback from our clients that we're going to break everything down into weekly segments. So we will cover everything in depth from the major story. So Sammy can share the major story that he started this year with in a second. We'll share on-chain data, what we're seeing there, all the major macro events to keep an eye out for that are going to have a big impact on the crypto price, technical analysis, and then we finish every month with our top 10 portfolio with all the buy and sell levels, and it has the portfolio breakdowns as well for different risk levels, so high, medium and low risk. What I will say, something that we're really excited to deliver, Sammy, Tristan and myself, to get everyone who wants to make some serious money in crypto this year, we want to give away 1 month free access to our premium newsletter. So if you're not a current subscriber, jump on the link in the comments or in the bio, and you'll be able to access our newsletter for free for a month to test it out, see the great insights that we share, also look at some of the past releases as well. Sammy, why don't you share what you released as our first edition, our first week of 2023?
Thanks, mate. Yeah, I had a ton of fun writing this latest release. It's always great to start fresh with a new year with a bit of new perspective after a bit of a breakaway. And I really wanted to hone in on the 2023 as a whole new year. You don't want to be caught up in the recency bias of what happened in 2022. This year will be different. And, you know, there's still caution there, but we also, again, we just want to forecast out, see where we're at in terms of the macro, but also look at the 2024 Bitcoin halving, because that has some interesting cycle rhythms that we have to pay attention to over the previous cycles. And the year prior to halvings, generally we've seen a bit of a recovery. So I think it's really important that we don't sit on our hands this year. And I just wanted to, I guess, shock a lot of people just maybe into refocusing for this year, and to know that there's always opportunities around in this market, even if it's fleeting. You just got to be prepared for it. So yeah, I was really excited to release that newsletter on Thursday last week. So if you haven't read it, make sure to read it, and looking forward to Tristan's FA this Thursday. And
can you drop one golden nugget from it that might get people excited to tune in and read it if they haven't done already?
Yeah, so I looked at the last cycle, and in 2019, we saw a rally in Bitcoin from the lows of around about 330%, and the altcoins rallied somewhere in that vicinity as well, but it's kind of relative to their market cap. You could make some serious gains. But what was really interesting, similar to where we are now, is that Bitcoin is considered once again to be the lowest risk asset in this asset class. So it's going to garner a lot of capital, it's going to garner a lot of attention if we do see that rally. So I think we have to be aware that capital is still, and investors are still hesitant to move back into the more speculative aspects of cryptocurrency at the moment. Doesn't mean we can't see a bit of a rally in altcoins, but it also means that investors are going to be looking, if we do see that rally into the recession. I know that's counterintuitive, but it has happened historically where we have a rally of risk assets and hard assets into a recession. That's my sort of thesis, where I'm thinking we could likely see this year a bit of a boom and bust. But I'm thinking that Bitcoin and Ethereum and a few of those lower risk, higher market cap cryptos could see a larger uptick than maybe we're used to compared with those lower market cap altcoins. So that was my biggest takeaway from the newsletter I put together just then. And yeah, it's again, I want to make it sure everyone's focused on the cycle rhythms, because if we're just focused on a big bad old bear market that happened last year, and yes, the macro is still overhanging and bad, but eventually these rhythms do have a way of kicking back in. So yeah, I just wanted to make sure everyone's aware of that.
Yeah, nice. And I remember doing a study of 180 coins, and I think it was 174 of them were beaten by Bitcoin in the first 6 months of 2019. So only 6 altcoins outperformed Bitcoin in the first 6 months of 2019. And the boom and bust cycle that you spoke about just then also played out in 2019, where the first 6 months were really strong, and then there was that really strong pullback roughly 6 months into the year. And that's potentially what we could see, which could really shock a lot of people. A strong rally, catch people off guard. Typically, the pattern is people will buy at the top, then there'll be a strong pullback, people lose money, they start shedding their capital. So this is why it's really important to have the data, have the insights that we share as a team at your fingertips, so you can make some informed decisions and not be caught by the market, caught off guard, not invest when the opportunity is there and then end up buying when it's the worst time and when we'll be telling people to start cooling off and pay attention to what's about to happen next. So thanks for sharing that, Sammy. And Mr. T, I'm really keen to hear about the FA that you're releasing as of tomorrow. It's probably one that most people haven't heard of. Why did you choose this one in particular? What's exciting about this project? Very high level. Obviously, people can read the FA in depth. What caught your attention on this project to share with people?
Yeah, so Casper Labs released a blockchain called Casper back in 2021, if I'm not mistaken. It's a layer 1 that's a sharded blockchain, and it uses a consensus. Basically, its consensus protocol is similar to Ethereum 2.0. So it uses like sharding and what's called correct by construction. So ultimately, it executes a transaction after a block is finalized, which differs a lot from the existing sort of blockchains out there, like Bitcoin, which uses the longest chain rule, where it's a competition, it's a bidding war in order to basically get your block finalized before someone else. So it removes those sort of elements of front running and things like that. So that's just like super high level on the technical aspect. But what got me interested in it is more the features of the network, where there's like upgradable smart contracts and things like that. And that's highly suitable for like enterprises. So it's touted itself as an enterprise blockchain, whereby you'll have businesses being able to build their particular, functions onto a blockchain. So, I mean, that ranges from like tons of different things, whether it be accounting, because blockchains are obviously great at that with a public ledger, being able to deploy private smart contracts onto a public ledger. So then that way, you can put in things like weighted key management, which basically means you can like send an NFT to an employee and they have a particular level of access in, like, let's say like a company back office system and things like that. And of course, it's the tokenization as well of like basically everything, which is something I always talk about. So they're really big on smart NFTs. These differ quite a bit from typical retail NFTs, which are more around like, retail NFTs, they're generally quite immutable. So you can't really change much about an NFT as we know them today. But Casper are looking more towards the smart NFT side of things, where you can modify particular aspects of an NFT. So there'll be like tons of different use cases in that. So again, without going into too fine a depth, one good example is IPWE, which is an IP, like an IP patenter. So they're known for, if you've got a great idea, you want to go register that idea and you want to basically create a patent out of it, you can do so. What they've done now is they're seeking to change their patenting process to actually minting an NFT. So there are tons of different implications for that. In the context of, say, you have a great idea, someone uses your idea on chain, that you can give on-chain permission for people to be able to see sensitive information around an actual piece of IP, while also collecting royalties in the event that you, say, approve the use of your idea. So they've got like 25 million patents. So they're quite a big deal. And Casper's partnered with like IBM, as well as like a number of other sort of enterprises. So I thought it'd be a really good opportunity to do an in-dive depth on Casper, mainly because, we focus so much on, going back to, say, the origins of blockchain and cryptocurrencies. We focus so much on value exchange and storage of value, whereas on a blockchain like Casper, zero value transactions have value. Like that may sound counterintuitive, but being able to execute a transaction and it's actually a component of your business, that's what got me particularly interested in it. So yeah, that will be ready for everyone tomorrow.
Yeah, awesome, mate. That's fantastic. And I know one of the big trends that we are looking at for 2023 is big adoption from large-scale companies. And this obviously is great technology for them to integrate into what they're doing to help them have more security, more access, but more customizable ability, I guess, to what they're doing with the smart NFTs. Really clever stuff, it sounds like. So keen to read that, and if anyone is tuning in and listening, is incredible the amount of depth and clarity that Tristan provides in his fundamental analysis pieces. So thank you for all your effort and hard work that you're doing with that, Mr. T. I want to turn our eyes now quickly to what's happening in the market. So obviously recently we have seen a movement in price, and that's caught some people off guard, but some people have been, I guess, having their eyes and ears to the ground so they could see this kind of stuff coming. It's been a really nice structural change, upwards, higher highs, higher lows, all the way through this movement here. But the big thing that's really coming into play is what is the forecast here, as you can see. So this is the 12th of January. It's the dates are slightly different because it's US based. So prior, this is for the core inflation level. So this just removes certain things that general inflation has to make it a bit more specific. And you can see here, previous was 6%. So it is moving downwards. It was 6.3, now 6. The consensus and forecast 5.8, 5.7. This is definitely having a positive impact on the pricing of what's happening at the minute. Inflation rates, as you can see, has been gradually decreasing for a number of months now, and there's a consensus of further decrease here, 6.5, 6.7. This has notoriously led to a rally in pricing after the event. So something to be aware of. That is getting released tomorrow. That's US time. I don't know what the exact time is of the release. I'm sure it's here somewhere. Sammy, do you want to share any insights on this? Just keeping it super high level and a bit PG for our listeners, but anything that you want to share specifically? Where do you see the movements going? Do you see any potential risk coming up in the near future? Obviously, we've got the interest rate release on the 1st of February, which I know there's been noise around that. Last year, Jerome Powell was saying it's a hard kind of 0.5 raise, and that's what we're going to keep doing until we completely destroy the market. But it seems like the narrative has started to shift slightly based on maybe the forecast of these numbers. So can you share a bit more for everyone that's tuning in?
Yeah, so that forecast, I was looking at that when that came out last week, and that gave me a lot of confidence in the shorter term thesis that I think we do see a bit of a rally. So I think the markets are pricing in that forecast, that consensus. And so that's what we've really seen in Bitcoin. You haven't really seen the S&P yet, which is interesting. It's more hard assets that are running. So what I've been thinking for a while is gold and silver have been pricing in the recession is coming, and then Bitcoin has been severely lagging. But this is really interesting because if inflation's obviously falling, the Fed, in my view, Jerome Powell is going to try and balance this out like a seesaw. He's going to think markets rallying, inflation is falling, but the job's still not done. He's still, with his podium, is going to try and smash markets. So I think the risk here is that we're rallying up. While I am bullish over the next few months, if not 6 months, I think in the short term, this is a minor push up, but we're going to run into some resistance here. And I think there's a risk when he gets to that podium after the inflation figure comes out, he's going to try and just hit this rally on the head. And I think we do have a pullback. And then afterwards, I think we do resume a bit of an uptrend after whatever the markets want to price in after that, depending on what he says, which I find interesting. And with the interest rates as well, I think I put my bottom dollar on that. I think they're still going to try and hit that 5% mark. I don't know whether they're going to go straight down to 0.25 in February. I just don't know. But my gut is that they're going to do one more hike and then they're going to pause. That's just my thought around it, because the data is clearly coming in that inflation going to put that massive constraint in the economy. So yeah, 4.5%. Is that the federal funds rate? 4.5% at the moment, I think it is. Yeah, so another 0.5 and bring them to 5%. That's a nice even number. And look, I think they might pause at that point. And as well, just to throw in there, why I'm confident that there is a pause coming. The markets are trying to rally into the pause, and then the Fed pivot is historically when we do see actually markets fall over. Again, counterintuitive. You think when the Fed pivots, the cutting rates, they're putting money in the system. But no, it's a big shock. And then it takes a little while for that stimulus to hit. But what we're seeing is the US dollar falling and yields falling. So if the Fed were going to continue raising interest rates, the dollar market should be sniffing out. It should be moving higher. And right now, the dollar looks pretty weak there. Could rally there, absolutely, if they raise rates again, just a little bit. But pretty clearly, there's a massive sell-off in the dollar. So the market there is trying to call the Fed on that their rate hiking cycle is essentially coming to an end, as well as yields, they are falling. So for me, it does look like we're coming to a close. We're coming towards the pause. And my thesis is we're going to see an upwards grind into the pivot, or wherever this pause is. Markets will find a positive move higher. And then after that, I think that's when we do run into trouble. So short-term risk and also longer-term risk this year, but mid-term could be very interesting.
Yeah, absolutely. I think I completely agree with you, Sammy. I think there's going to be a little rally followed by some form of pullback, and then we might have continuation from there. Obviously dependent upon what is outlined, but it looks fairly positive at this stage. So yeah, keep your eyes and ears to the market. Mr. T, anything that you want to share over the top of what Sammy and I have just outlined?
Nothing other than just echoing your sentiments, basically. We're all just sort of eagerly awaiting that pivot, because I think we have a consensus among ourselves that we should see like a sort of moderate rally, because I agree with Scoop that 2023 is not going to be 2022, but that we're still scheduled to run into some trouble around that pivot. So as long as everyone's sort of keeping their eye on that, as soon as I guess we see that pause in interest rates prior to the pivot, then we need to start sort of just getting getting more disciplined with whatever our stop losses are in order to manage our risk and things like that, I guess.
100%. And just to throw in there as well, being hyper vigilant when we do see these potential gains and these profits that we're taking. Yeah, take the profits there, but it's kind of like this. The mindset you should have right now as investors, in my opinion, is this isn't a bull market year. This is a recovery year where we likely see a recovery in a few assets there, and you take your profits where you can and reload for the halving, which is next year, and then the likely bull market that follows. According to history, it may not be the same, but that's the rhythm we follow. So there's opportunity this year, but my goodness, you got to be pretty vigilant about taking profit. Like, this is not the year, in my opinion, to just stay in the market and let it ride for those higher highs and higher lows, confidently thinking that this is just going to keep going higher as the liquidity is pumping in. It's not the case. The liquidity will likely hit this market when the Fed pivots, and there's a bit of a lag on that. Likely 2024 is when, if they're going to flood the system with money, and I think they will eventually, that hits in about 2024, which lines up really nicely with the halving. So it's kind of my timeline. And with a lot of the stuff the Fed does, there is a lag. I would have guessed that they would have pivoted already, thinking that the system couldn't maintain these high rates that they're doing right now. And there are signs that the system is struggling with the lack of liquidity, but it hasn't structurally broken anything yet, which is fascinating. We saw what happened in England with the pension market, but beyond that, Japan, really wobbly, but so far these higher rates haven't really affected too much. But yeah, I could go a bit deeper there, but yeah, that's just my thinking.
Yeah, no, and I think it's very important to bring up mindset, because mindset is the difference between someone who's successful and not, and that is it. It's really the mindset to go in and get educated, the mindset to go in and take action on your learnings and make sure that you're always across what is happening in the market. This year is going to be a year of ups and downs, and there's going to be a ton of opportunity and money to be made. But if you just buy and sit back and think that you can hold and you're going to make money this year, you need to be a little bit more active and proactive in how you approach the market. Doesn't mean that you need to become a full-time trader by any means. I certainly am not, and neither does anyone here in the team. But you need to be actively engaged and at the forefront of what is happening, be aware of when the changes are coming, macro events that are being released, and then understand when to enter in and exit out, what are the key levels. And that's everything that we're going to be sharing in the newsletter releases. We've broken it down into weekly so it can be a lot more absorbable and actionable for you guys. So we really hope you enjoy it. Any parting words from you guys before we jump off? No, I thought I'm stumped. Well, good. All right, well,
go hard or go home.
Look out for Mr. T's release tomorrow and all the other awesome releases that we've got coming in the forthcoming weeks. But that's all for now, and thanks for tuning in. Take care, guys.